week high, though. We'll get back to that data point. Well, let's talk about the stock of the day. Nestle India gaining in trade after reporting a solid showing in Q2. Mangalam joins us to dissect those numbers. Mangalam?
Well, the first FMCG company major to report their second quarter numbers of the street is not going on with a lot of expectations, but more importantly, it's also the first quarterly performance under the new leader for Nestle India, Manish Tiwari, and what a performance it has been. The company's reported strong double-digit revenue growth. In fact, the street was working with a number of just 5285 crores, which would imply a 3.5% sort of growth. The company has gone ahead and reported a 10% plus revenue growth at 5600 crores. In fact, the EBITDA as well has been a beat against expectations. The margins a slight miss, but nothing really to complain, because on an absolute basis the EBITDA and the revenue have been strong beats, and the net profit as well, 753 crores versus street expectations of 710 crores. What is it that led the growth? Domestic business grew about 10.8% versus expectations of 3 to 4% growth. Exports grew 14.5% versus again expectations of 8 to 10%. So both on domestic and exports, the company has done a lot better and led by strong double-digit volume growth in a lot of their categories. In fact, the company says 3 out of their 4 product groups delivered strong volume-led double-digit growth, and there was distribution expansion in products like KitKat, which aided volume, especially in the rural markets. We've been talking about how rural and T2 are doing a lot better this time around. Even Munch and Milky Bar did well. Pet food business reported high double-digit growth, in fact the best ever since incorporation of that business into Nestle itself. The only near-term worry, so to say, is the gross margins. They compressed about 230 basis points. The street was working with a number of an 80 to 100 basis points compression, but nothing really to worry about there, because milk prices are expected to soften after the festive season. Coffee prices also expected to stabilize if not fall, and edible oil prices are the only ones which are likely to remain firm. We are seeing some moderation in cocoa prices as well. So all these factors doing extremely well. Apart from all of this, what the street was eyeing is the leadership strategy under Manish Tiwari, and that has been outlined as well. They've said they're focused on penetration-led volume growth. In fact, they will invest in growth, accelerating investments in both brands as well as manufacturing capacities. This after they've increased their capacity in the Sanand facility. And finally, the endeavor for the company remains fast, focused and flexible. All these factors working well for Nestle. The stock is about 10% away from record high, did well in yesterday's session, is doing well today as well, trades at a premium to the FMCG sector, but if it continues this kind of outperformance, there's no reason to believe that this premium won't be justified.
Thank you. Very well explained. And now Nestle is just 5% away from its all-time high level. The all-time high is 1347 on Nestle, and the stock is now at 1280. So not much distance to go after today's 5% gain. Devin, are you surprised by Nestle's strong numbers? Look at the volume growth, much higher